At the core of business acumen, developing business acumen, there's this fundamental mental model that we use that we call the 5 drivers. And the 5 drivers is a model that every CEO and every executive of every business, public or private, US, outside the US, regardless of the industry, every business and every executive fundamentally thinks about 5 things. Those 5 things, those 5 drivers are cash, profit, assets, growth, and people. People right in the center of this model. So this is a mental model that executives use to determine strategy and priorities and bets and choices that they make, and what are the ripple effect financial implications of those choices. And I think the power of these 5 drivers is, one, in the interdependency of these 5. Meaning a business has to make a decision on what they do with their cash. Do they invest it to make an acquisition that expands your growth driver, for example? Or do you invest in assets that allow you to expand your product portfolio and your manufacturing capacity? Now, these 5 drivers are also really important as a mental model for you if you're in sales and selling to businesses. To understand their world, their priorities, their challenges, their industry, understanding how this 5 driver model looks and acts differently for them than it might be for you. Because as you start to understand how this 5 driver model interacts with them, then you can start to position your products and solutions that better align to what they most are focused on, right? Their biggest priorities, right? If you're going to go in and sell to a customer who growth is number 1, driving top line, driving market share, getting new products to market, expanding geographically, then your products and solutions have got to better align to that narrative. However, if they're really focusing on profitability and driving what we call operating leverage on the P&L, driving more and more cost efficiencies, then your products and solutions are going to have to be talked about in a very different lens. But knowing which of those are more important to them, I think is really vital to be a better business partner with them as a sales professional. Understanding how your products and solutions fit with what they care about is at the core of business acumen. But if you knew nothing more than what was the trend of their revenue growth and what was the trend of their profit growth, then you've got a pretty good sense of what's likely happening in that business. For example, if they're driving revenues but not driving profits, if their revenues are growing, that's a great sign of market share and differentiation and competitive advantage they have in their markets, and they're gaining more and more customers. The problem is that those sales revenues are not translating to the bottom line, meaning their costs are growing at a faster rate than sales. So what are they naturally going to be thinking about if you're going to go in and sell to them? That their revenues are growing but their profits are not. They're likely going to be a little more price sensitive, cost sensitive, because their costs have been going up faster than sales. Now, flip that around. If you go in and you're going to go sell to a customer and their profits are growing but their sales are not, or the revenues are not, what does that mean? Well, if their revenues are flat but their profits are up, that means then their costs have actually been going down over time. So it's either squeezing of costs or driving more and more efficiencies. But the challenge is they're not growing top line. They're not winning market share. They're not winning versus their competition. So they're managing their costs well, but they really need you to better align your products and solutions and how you can help them drive more and more of their top line, getting into new markets, getting into new customers. So if you knew nothing else, when you think about the 5 driver model on if they're growing top line and not seeing profitability, or seeing profitability and not growing the top line, the positioning that you have to make around your products and solutions is going to be very different. And when you adapt your sales approach in alignment with what they're dealing with and what they're thinking about, that is a great demonstration of having good business acumen. Let's do a quick dive into how these 5 drivers may look and act differently in different industries. So for example, if you're going into selling into big retail firms like the Walmarts and Kroger's and Targets of the world, their issue is they typically don't carry a lot of cash because most of their cash is tied up in inventory. A lot of their cash is also tied up in physical assets, right? Buildings and shelves and things like that. So their margins tend to be pretty thin because they don't have a lot of pricing power. They don't have a lot of cash because the cash is typically tied up in their inventory. And they really need more and more return on their assets and faster inventory turns to help them grow and generate enough cash flow for them. Now that's retail. Now let's take a whole other view of this. Let's think about pharmaceutical companies, right, who tend to carry a lot of cash. Their margins are really, really high, but they don't have a lot of fixed assets. They have a lot more kind of intangible assets, right? Patents, licenses, and trademarks. Now they carry a lot of cash because they have to invest for years in product development and research and development. And when they finally get a product to market, they need to make sure they price well above their costs. So if you think about the 5-driver model in different industries, you'll just see that it starts to shape and morph in different ways for different businesses in different industries. Knowing how this 5-driver model applies to your biggest customer, I think is a vital first step in having great business acumen. Okay, now once we've understood the 5 drivers and how those 5 drivers might change and adapt by industry, I think it also may be important to understand how these 5 drivers change by business stage, if you will, life cycle of a business. Early stage, it's about trying to get a product to market, getting the right people, and having enough cash to be able to fund the innovation. As you get later stage, it's about operating efficiency, standardization, generating good, stable cash flow that then allows you to fund the new products that allow you to kind of expand and innovate and grow. Where are your customers in this stage of maturity? And understanding what stage they're in better allows you to then position your solutions in a language that they care most about. And that's a great demonstration of understanding their business better, using good business acumen to be a better business partner for your customers. Well, if you're selling to customers who are large and publicly traded, may have their financials available publicly, first thing I would do is go to their investor relations website or anything that's highlighting what are their latest executives' messaging and financial metrics that they're going to be talking about. You're going to hear from their messages: cash, profit, assets, growth, and people. And you'll get a sense of how often they're talking about growth as opposed to how often they're talking about their profit margins or profit trends. They may be talking a lot about their products and new product development. That may be a little more assets. So start to get a sense of how do you use this 5-driver model as a lens to understand the messages that their executives are sharing. And their investor relations website is a great source for that. Now you also have their financial statements. So if you could only just look at their income statement, also known as the P&L, and see if their revenues are growing and how is that going in relative to their profits. And ideally, their CEO is seeing revenues growing and profits growing faster. But if they're not, that means they're dealing with some kind of challenge that you can help them with. And now, if they're not a publicly traded company, what do I do then? Well, you may want to go look at maybe their bigger competitor and at least get a sense of what's happening in the industry and what are their competitors saying about the industry and saying about their trends. That's a way to at least understand maybe a bit of how your customer who is privately held and is not sharing any of this stuff, it at least warms your mind to what's happening in that industry and how they talk about their industry. And being able to use these tools that are available for you and the art of being able to question and probe into where their priorities are starts to help you really understand what the other side of the table really cares about. And then better position your products and solutions to that language is a real art. We invite you into this journey of this art and science of building your business acumen.